All right, what's up, guys? Ricky here. Welcome to the Sunday Prep. Just give me a minute. Let me get this tweet out, and I'll be right back with you. And if you see the tweet, please retweet it. Let's get more people watching this. Okay. Got the tweet out. Post it to True Trader real fast. All right, got everything out. How's everybody doing? What's up, guys? Happy Chinese New Year, or actually Lunar New Year, I guess I should say. A lot of different Asian cultures celebrate it. My wife is Chinese, so we definitely are celebrating this weekend. And I will probably be keeping this Sunday Prep short and sweet because we are actually off to a potluck Lunar New Year's celebration right after this, so we will knock this out. I think there's a lot of really good ideas, some good stuff to discuss, and then I'll let you guys get back to enjoying your weekend as well. What's up, Wesley? Hey, Sam, how's it? Like I was saying, guys, if you're just joining, I put a tweet out. Please retweet the tweet if you can, or share the link on Facebook or Instagram or Twitter, wherever you guys have people that, or even your Discord rooms, right? I know a lot of you guys are in Slack or Discord rooms. Throw that link out there and get some more eyes on this for me. I appreciate it. What's up, Cruz? Hey, Raul. Give it a few minutes. We'll get this thing started. We always start 5 p.m. market time, right? So I come on 5 minutes early, let people kind of come in and get situated, check the score of the football games. I'm really happy the Chiefs played yesterday, right? So my focus is good to go right now. I am kind of hoping the Bills can beat the Bengals because I hate both teams, but I hate Joe Burrow more. And both those teams tend to give my Chiefs a difficult time. Yeah, thanks, Gambino. Got a big week of earnings ahead of us too. Make sure you guys are ready for that. Cruz. Yeah, that's the evening game, right? Dallas and 49ers. How many people we got here? It's quite a good turnout so far for watching the live stream. Like I said, if you guys can always retweet, get more people in here, that's great. And remember, like when the live stream's over, if you guys can do me a solid and go back and leave comments on the actual posted content. If you're watching this after it's recorded, right, when it's not live, please do me that favor of leaving a comment, whether it's just something you guys want to see more of or less of. You know, just give me some feedback on what you like or dislike. We're always listening to that kind of stuff. I want to make the end product better, and the only way to do that is to know what you guys prefer. Gambino says, is SPY set to spring up past the trend line? We'll get to that for sure. Who knows? And like that, you guys know me. You've been watching this long enough. I'm not here to act like I have a crystal ball, right? I'm here to just give my plans on how I will execute, and all under all different types of scenarios, because we don't know what's going to happen, but you have to be prepared for all those scenarios. What's up, Javier? Hope you guys are having a great weekend. All right, it's 5 p.m. market time. You know what that means. Let's get this started, guys. Welcome to the Sunday Prep. I'm Ricky Analog. I'm a moderator over at True Trader. If you guys haven't checked this out yet, check us out. It's TrueTrader.net. If you use, I believe, YouTube all caps gets you a discount on the subscription. And basically, you know, you got access to a bunch of the moderators. One of my biggest personal mentors is over there, and you know, everything from options to small caps to large caps to define how to create systems and define a system, black and white. Something that I can't recommend enough, right? I talk to a lot of traders that really I think could benefit from systematizing their setups. So check us out. Cobra Trading, if you guys don't have a broker you can trust, check these guys out. I honestly, it's my favorite broker, hands down. I have brokers everywhere. The link in the description will save you some money with them, as well as get you a free month of whatever platform you want to use. Check them out. Spikeet, these guys created a product that allows you to pull historical stock data. Speaking of systematizing your setups, you need to know if you have a statistical edge, right? The only way to do that is to collect data and let the data tell you, right? Numbers don't lie. I used to do it manually, pain in the ass, took months, right, to collect enough samples to have what you would consider enough samples to make it reliable, right? These guys made a product that allows you to do that in 10 minutes, right? Depending on how well you can use their platform, you know, I can go and create a poll, like a data poll. It takes me 5 or 10 minutes, depending on what I'm trying to get. Obviously, it might take a little bit longer if you're using it for the first time, but they've got videos and tutorials, and you know, it's one of the most powerful products I've ever used, and I use it. I fox with it heavy, like every single week. I use it a lot. Check them out. There's a link in the description for them as well. ScriptsToTrade, these guys create tools for Thinkorswim and TradingView. If you haven't checked these guys out, I don't know if you've just been living under a rock or something, but you now can get a subscription-based service with them where you just pay a monthly fee and you get a whole suite of tools. And if they don't have a tool that you're looking for, reach out to them. They will work with you to create whatever it is you can dream up. Tradervue, you got to be tracking your performance metrics. This is who I use. If you only have 100 or less trades per month, they actually have the ability to use their system for free. It doesn't come with all the bells and whistles that the tiered packages do, but there's a link in the description for them as well if you want to check them out. And like I said earlier, it's a huge week of earnings, right? So make sure you familiarize yourself with who's reporting. Some of the biggest names are this week, right? This is probably one of the biggest weeks, if not the biggest, right? Actually, I think you could probably make the argument next week's a little bit bigger, but this is not a laughing matter, guys. Do not get blindsided by a name reporting. Like, if you're swinging something long or short or whatever it is, you really can't have this excuse like, oh, I didn't know they were reporting. Like, I hate when I get these DMs like, yo, what's happening with Tesla after hours, right? Like, what do you mean? They reported their earnings. You should have known that. And you have no excuse unless this is not a business to you. This is just something that you're doing to scratch a gambling itch. And if that's the case, I don't know why you're wasting time watching the Sunday Prep, right? All right, guys. So let's get into the disclaimer. Neither I, True Trader, or any of our affiliates are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about is a solicitation to buy or sell any stocks. It's simply for entertainment and educational purposes. All right, let me switch. Here we go. Here is your week ahead of economic data. Make sure, again, another thing, you need to know what is coming, right? So you've got your the manufacturing PMI on Tuesday morning, 15 minutes after the bell rings. That's an important one to know about because it's right after the bell rings, right? A lot of times you get it, like if you look on Thursday, right, we have the jobless or the jobs numbers. That's 8:30 in the morning. So it gives you time to kind of watch it, see what the market thinks, and make plans. Whereas Tuesday, right, 15 minutes after the bell rings, you could get hit by some directional moves that you need to know could come, right? And then Friday we got PCE. So those are the three that are kind of important that you should pay attention to. All right, so let's get into the broader market. Here's your ES, and actually Gambino was kind of asking, like, is this the week? You know, does SPY break out of this downtrending trend line, right? Well, even remember what I always say, guys. For me personally, and this doesn't have to be how you look at it, it's just how I look at it. The trend lines don't matter. They're just visual guidelines. For me, what matters is the actual trend. And we could break above this trend line and still stay in a downtrend, right? We still could just stay below, those highs from, I believe that was the last CPI or whatever, the highs from December. And we could, break above that trend, come back under, roll back over. And the even though we broke that trend line, we never really reversed the downtrend on the weekly time frame. That could happen. But there are some other things that are a little bit concerning. One of them being the fact that, we've tried to break below that 3,900 for 2 weeks in a row, and it kept holding. And then you get a pretty strong close towards into the end of the week. Let's get into the daily and we can kind of discuss it a little further. But yeah, we had, Wednesday was a really, really clean trend day to the downside, and it was set up absolutely, you couldn't ask for a better setup up here, right? Here you had your long trigger that failed to make new highs and then broke back below this, basically the 4,000 level. And it was just a complete unwind trend day to the south side all day. It was literally textbook. And then you had a little bit of an attempt to continue on Thursday, but then Friday it was a rally trend day, and we were just, strong all day. There was the one part of the day, I think I can show you guys here on a 5-minute. We had been talking about this level here. I actually had been talking about it on the SPY, but basically pointing out under this level, we have some room to come back under or to come back down into the 20-minute time frame. And it cracked, it flushed, it held the previous day's highs, and then it made new high a day. And I was pretty much being like as loud as I could or vocal as I could about the fact that right there is not what shorts want to see, and like that's dangerous, right? And of course, right after something like that happens, you have to understand that's why a move up the way it moved up is so possible or so foreseeable. It's not a for sure thing, it's not a 100% thing, but it's one of those things where it's like you have to understand that is in the realm of possibilities. And when we have these trend days, whether they're down or up, it's very common to have us close at the lows or the highs. Wednesday we closed at the lows, right? Friday we closed at the highs. That's not uncommon for trend days, okay? So we had that big trend day on Friday. Thing is, it's right up into those breakdown levels from Wednesday, where we had that very, very clear, clean short trigger that sent us rolling over. So we're retesting those levels. It's an important level. It's something I'm definitely watching to see what happens when we retest it. But just keep in mind, when we had this consolidation period here between let's just call it mid-December and early January, where we kind of went sideways. And when we finally broke above it, the first retest held. And then we just retested it again, right? So that's that 3,900 level. We've tested it twice now and have had this inability to stay below it or get any kind of continuation through it. That could change, but it's just one of those things that you got to take note of and you got to be paying attention to, especially when you're trying to figure out your levels and what is possible for this coming week. So I'm going to go ahead and check out the hourly real quick and look at the levels. Obviously, it's going to depend on where we open tomorrow. If we open flat to / gap up a bit, the first level I'll be looking at is the 50-day, which would be that 39.40 area. But really that 3,900 area is the spot. That is the spot that, like I said, we've tested it twice and it held twice, and it's also the 20-day. So that's a really, really key level for me. If we come under that level, I definitely like the quarterly pivot, and I also like this 3,800 area right down here. I like both those levels as support levels, but I also have to make sure that I make that mental shift that if we come back below 3,900, that I really do kind of want to be focused on shorting pops back into resistance, because I really think that, we've tested it twice, we've held, but now we're, like I said, we're making this really big push right back up into the major breakdown levels from last week, right? So that I'm very interested to see what happens if we test it, or when we test it. Do we reclaim and start to hold it and then get the ability to make another push, or do we reject? And then if we start coming back down, obviously, like I said, I like the 50-day, I like the 20-day, but we come under 3,900, there are levels below where I'll play it for bounces, but I'm really trying to make that mental shift to shorting the pops back into the, like if we unwind down into 38.50, pop right back into the underside of the 20-day and that 3,900 level, to me, that's a big short, right? To me, that's one of those levels where a lot of people a lot of people are going to look at that as going, well, that was a major level of support that may now turn into a major level of resistance. So yes, we do have levels below it, 3850 and 3800. Below 3800, remember that would be the short continuation trigger on the higher time frames. That's a very important thing, and I think if we do trigger that, then we really have the ability to roll back over, unwind, and things could start to get ugly if that happens. And so if that happens, that 3700 levels in play and that 3640 area. And again, if you go back to prior Sunday preps where we talked about when I would think that I would be willing to try anticipating for longer term accounts and putting on long-term swing positions, just revisit what we said about that in I believe it was last Sunday prep or maybe the one before that, because I don't want to reiterate it every single week, especially when we haven't even rolled over or broke that level. But just keep in mind, like, for me, there's no reason to anticipate anything right now. I'd like to see us crack those levels first and come down lower and test lower levels. Now, on the resistance side of things, if we were to gap down or open up, I kind of like to think of a gap down here, and then I would use this high from Friday, but really it's just too close to this 4,000 level, right? 4K for me is like the big spot, obviously up here. Previous week's highs are going to be a major level of resistance for me to be playing against. Let's see, right up into this 40-50 area, which is your new annual pivot, and then 4100, and we could zoom back out a little more. 4180 is the spot that we had that big rejection. You can just see like pretty much same level as here. Okay, so definitely a key level up there at 4180. I don't know if we get up there this week, but I do like to put some levels a bit further out there just in case we do. But remember, my main focus for the Sunday prep is Monday and possibly into Tuesday, maybe a little bit Wednesday. Even though these levels are important levels, depending on what happens on Monday, I have to do my Monday night prep and be reassessing everything. Do my levels from Sunday prep still matter? Has things changed? Is there, was there any sort of macro events that came out that make me have to rethink things a little bit, right? So yeah, just making sure you guys understand that train of thought. NQ, I don't remember if there's anything really I wanted to point out about it. I would like, for the long ideas on NQ, like I actually am really kind of short bias on tech. And you'll see when we get into the sector ETFs or whatever. And obviously Nasdaq is tech heavy. But if I wanted to be long bias, I would have liked to see this flush on Wednesday and Thursday come lower down to like this 11.2 area, because we haven't retested that ever since that failed breakdown on January 6th, where we just basically just ever so slightly broke the previous week's lows and then reclaimed. We haven't really come back and retested that. That would be where I would want to see a test before I started looking at longs. I think I'm still really short bias on any kind of pops up into some of these levels with the tech stocks, and like I said, we'll see that when we get into the sector analysis. But for now, let's real quickly touch on Bitcoin, because I know everybody's wanting to know about Bitcoin because it's having this big move, right? And that we have these sector moves, so there's a lot of plays, there's going to be a lot of opportunity here. And just remember, like, one of the things I like about crypto, even though I don't trade crypto, is that it really obeys technical analysis very well. And if I had to guess why, it's because it's really kind of hard to use fundamentals to kind of create a valuation for what's the fair value of a Bitcoin, what's the fair value of all these other altcoins, right? Like, so really, when you don't have any way of doing that, the only thing you can really go off of is trends and technicals, right? And so, I mean, this first big move up, where did it test? It tested the last big move ups, basically where this reversed down from and finally cracked those levels. We tested that, kind of consolidated, held, next leg up. Where are we kind of stalling out? We're stalling out at that next level. I'm really interested in this 25.2 level. 25.2 is where I'm hoping we kind of push up there and test, because you'll see there's a coin idea, and I'm also following all the other individual equities that are crypto related, and I think a big move up into those levels can really offer some good short setups, especially if we can get up there emotionally. Obviously, there is that next level up, which is going to be that 28.7 area. Dude, it's funny talking about these 5-figure prices, like 28,000, right? But forgive me for rounding numbers and eyeballing things, guys. But that's, you know, that's the area that the next level. If we get above this 25.2, 25.3, that would be the next level that's in play. Let me check out the weekly real quick on it. Yeah, basically just going to stick with what we've been talking about. Oh, and before I forget, keep in mind, one of the things that I still think holds true with the broader market is that we still really do have this ability to kind of coil and go sideways and see a narrowing of price range and setting a big base if that's to happen, right? And a lot of people, you know, we're in a bear market. Things are going lower. Everybody wants to know, when is the bear market over? When are we going to bottom? And when we're in a bull market and we're just going higher, everybody's, when's this bull market going to reverse? When are we going to have a bear market? And people always forget that there is a third option, right? And that is sideways consolidation, or as some people would call it, as a chop, right? And that can happen for long periods of time. Like, we could have a 1 to 2, maybe even longer year, 1 to 2 years of just going sideways and not really making any progress higher or lower. But that doesn't mean there's not trades. That doesn't mean there's not opportunity. There is definitely 100% going to be all kinds of really great opportunities. But just, I do still think that that's going to be a possibility, is that, you know, just kind of getting in a channel and getting tighter and start to digest some of these moves and you know, let the macro environment kind of play out and develop. People still are kind of uncertain, you know, like, are we going to go into a recession in 2023? There's a lot of other, you know, questions out there and uncertainty. So when there's all that kind of uncertainty in the market, I think a lot of people are slow to try to get too much exposure on, or to, you know, get caught off sides. And it wouldn't be too surprising for me to see us go sideways for a while. Just my opinion. And again, remember, when I come up with these ideas or have these theses, all I can change on a dime, right? We start making new highs, pulling back and holding higher lows on some of the time frames that matter, like the monthly chart, or we start making lower highs and lower lows again, like we start rolling back over. Trust me, that's one of the best things about just staying objective and reading trends and just remaining black and white, is the ability to just admit you were wrong about something and say, okay, here's what the author of the story is trying to tell me right now. All right, so let's get into the sector ETFs as well as bar chart real quick, and we'll go look at the sector matrix. Okay, here is the stock market sector matrix for short term, right? And we had, so you do see some red, right? But keep in mind, a lot of things bounced pretty high Friday, and so what we need to do is really take a peek under the hood on a lot of these names. But I actually made some notes about, and I don't do this every week unless some things just really stick out. Certain sectors that I, you know, have long bias for that sector or short bias for that sector. And it doesn't mean that if I don't mention a sector in these lists, doesn't mean that I'm not short bias or long bias. It just means that it doesn't have enough of that look, or it doesn't stand out enough to make, you know, if I don't mention it, it's more, to me, it's like, we'll see, right? It's more in no man's land. Communications is one of those ones where, if you guys remember, I had been really, really bearish that whole sector because it was just getting beat up this whole bear market. It was the one that started rolling over the earliest out of all these sectors, and it was just weak. Whenever the market would rally, it would barely do anything, if not sometimes even still go lower. But that is changing, and you'll see when we get into these ETFs and you can see some of these charts. We'll start at the top. Actually, I'll go ahead and just mention the tickers, or the sectors first. For long bias, it's communications and biotech this week for me that had my eye on the long side. Short is utilities, staples, and tech. All right, and so when we get to those sectors, we'll point things out and talk about them. So here is your weekly on retail. We are just kind of channeling here. We do have a bit of a higher low put in, but we won't know if it's a higher low or not until we reclaim 6760s, right, and can hold above there. If that happens, then we might start looking at dips as possible buys in terms of like positioning for longer term trades. I still think spikes back up into those levels, especially if they get there emotionally, can still be looked at as fades, and not even if it just shoves up there and rejects, but even if we break above those levels, keep in mind, until we're not in a bear market, we still have the ability to be looking for these failed breakouts, right? You see this happen a whole lot in bear markets, and that is a break above a level where you get breakout buyers, technical breakout buyers, and those are the ones that get slammed. You'll hear the breakout buyers talk about this all the time, like, know your markets, know the markets that work best for your strategies. And why are they saying that? Because bear markets suck for being a breakout buyer. Why? Because a lot of times you'll just see price break above a level, breakout buyers come in and they get stuffed, and then the move ends up giving back a whole lot. We've talked about that setup to an extent. I think we actually spent almost the whole intro of one of the Sunday Preps talking about that, right? So even if we rip above 67, 60s on retail, maybe we push into the 69s or the annual pivot. If it cannot hold above 67, 70 or whatever this level up here is, and it comes back below it, you still may have the ability to look at that as a really big short signal and just a failed breakout. So keep in mind the difference between the way you would day trade these and the way you would look at them, especially like a weekly chart, when you're trying to talk about positioning for longer term trades, right? A break above 67, 70, and we push and then we pull back and start to hold. Now you can kind of start to create trade plans where you're expressing a longer term position with risk defined. And at least you have the author of the story kind of having your back, right? You don't want the author telling you we're in a downtrend and you're trying to buy something for a swing long. You want to have the path of least resistance on your side, especially for swings, right? Especially for longer term trades. So above 67, 70, then we can start to look at things that way. Until then, I don't think that you can make an argument that there's a reason to be getting involved yet. All right, let's look at financials. Again, these guys had, this chart here is really starting to shape up, especially with last week breaking the previous week's lows, but still making that, a nice bounce off that weekly 50. I think we come back above 36.20s and we could see this push. Obviously, we're gonna have to see what happens on that next level test, but this one is starting to shape up. And if you remember, we've talked about it a lot. It's just technically the level that it held is just that is the level that you would be wanting to see hold. And it even gave you that failed breakdown play too, which to me, that really gives it some higher conviction for me, because when you see those failed breakdowns like that, you realize what's happening with the market participants, right? People getting on the wrong side of the trade, getting caught. We've all been there before, right? Something breaks down, we short right in the hole, only to have it reclaim right in front of us. And then you are faced with that decision like, oh shit, did I make a mistake? Do I need to take this off, or do I need to add to a loser, right? And then all of a sudden just starts going. Now you're holding higher lows. And obviously the scenario I just described applies a lot more to day traders. When I talk about we've all been there before, right? Like we've all been there before, where you enter a trade shorting on weakness or buying on strength only to have it stuff in your face, right? That still happens on these higher time frames, right? And you got to study them, and you have to start to identify those situations where they happen, because they really do create some powerful moves to the other direction, right? Just like right here. Here was one of those failed breakouts, right? We had this key level, we break above it and couldn't hold it, couldn't close above it. And then look what happens. Every time we test the underside of it, it rolls back over. Until when? Until it comes back down and retests that last breakout level, okay? And now we're making that higher low, trying to push again. Again, I don't want to talk or spend too much time on it, because that's the kind of stuff, you want to learn that kind of stuff. You might be able to try to figure it out from watching all the Sunday preps, but we talk about it all day, every day over at True Trader. So check us out over there if you want to learn this stuff. Real estate, looking pretty good. It looks a lot like retail as well, and it looks like it has this long trigger set up if we can get back over 40, right? I would really like to see it reclaim 40, start to hold. I could start to see this thing firming up and going again, but it's, again, still in a downtrend on the higher time frames and still has a lot of resistance above it that it would need to start to get above. First level is going to be that 4130 area. A retest of that probably going to enter, or probably going to have a lot of resistance up there. Where again, if you like individual names in this sector, you may find plays here. I don't typically trade a lot of individual equities out of the real estate sector, mostly just because not a lot of them have range or liquidity, which is what I need as a day trader. So 1 second, I'm just going to get some water. All right, moving on. All right, XLV, I want to remember to look at the weekly on this because we've been talking about this 134 level. Yes, it broke it, but that rally, look where we closed. We're right up on it. I'm going to wait until Monday to see what happens, to see if we kind of reclaim and hold. But the weekly chart, you know, we've just been drifting lower and lower, but we keep getting bought up, right? So now we're right down into that weekly 20, 50, and the monthly 20 as well. I think a quick reclaim, the first thing I would be looking for is the very first week where we can get a bar break up, right? When is the next weekly candle that's going to make a new high? So honestly, if it happens this week, I'm going right back to watching that 134 level as the key level. And again, another one of those sectors where still have a slightly bullish view on it, even though we broke below that level. But again, it's not on that list that I was telling you about because, yes, it's still technically in a bit of a no man's land, right? I want to see a reclaim, want to see it push, and then I want to see it start to hold. Materials. No, I did not put it on that list, but it looks good. We pulled back. We held nice, good rally on Friday along with everything else. Keep in mind, one of the things when we have a Wednesday, Thursday, Friday, like we had in the market, right? Wednesday, a big trend day to the downside. Thursday, an attempt to continue lower, but, you know, kind of pushing back up a little bit towards the end of Thursday. And then Friday, that trend day up. When you start to look at the sectors, the first thing my mind goes to is, how did these sectors behave correlated to the market? Because just real quickly, let me show you materials and then industrials. Okay, so this is materials and look at industrials. See the difference? See how the sell-off on Wednesday and Thursday was much more pronounced in industrials and the bounce was much weaker. That to me shows a lot of relative weakness for that sector, right? Compared to something like this, which almost, you know, reclaim probably 60 to 70% of that sell-off from Wednesday. So make sure you guys think in those terms. This is all a mental exercise to get your brain to naturally have those thought processes when you go into your nightly prep, right? When you're trying to get ready for the week ahead or the day ahead. Those are the kinds of thoughts you guys got to be naturally having, right? One day when I'm not doing Sunday preps anymore, you guys are going to have to be able to come up with these things on your own, okay? Things look good. I would like to see it get back above last week's highs if it was going to stay strong, and then retest of 84 if they hold. I think we can get another leg up. Remember, I think we said 88 would be the spot where I'd like to see this thing get to, especially if we can do it emotionally if I was looking to fade it. I think pullbacks probably to the 20-day are still good dip buy areas. Industrials, like I said, relative weakness. It did hold a key level, but even though it held that level, just that relative weakness makes me think any kind of push up into that 101.50 area is probably a good fade spot, especially if it gets there quickly. Utilities. Remember, this is on my bearish, the bearish one, and we've been stalking this for the longest time for this setup. It finally happened, right? Big move up. Here was your lower high, the intermediate lower high, and then the break below, what was it, 69, right? So it's triggered, it's valid. This is either going to head much lower and shorting all pops, or it's going to turn into a failed short continuation trigger, and it won't do so until it gets back over these highs here, which were 73, 79. I really like the idea of shorting pops on this sector into recent resistance. So anything up here into this 70, 60, 20-day to the 200-day, even the 50-day might offer a really good spot. Remember, I'm not shorting the ETFs. I have my eyes on pretty much DUK. There's a few other individual names in this sector that trade enough liquidity and range. The idea here is probably going to be a swing anyway, so you don't quite need the liquidity or range that you would typically need for the day trades, right? But again, this breakdown, even though it had this reclaim at the end of the week, I'm really looking to short the pops into the 20-day, the 200-day on. You'll see the Duke idea, Duke energy when we get into the individual ideas. But utilities, I'm not looking to be a buyer on anything here. I'm very short biased. Staples, another one I'm short biased. A lot of relative weakness and the exact same setup we just saw, right? Let's look at the weekly. Same setup, guys. Remember that, okay? The pop, lower high, and then the breakdown. I think all pops back into the 73.70 area are going to be a good spot. And even if it gets above there, you got 74 as the annual pivot. You have 74.50 as the current 20-day, and you have 75, which is a psychological round level. There's a lot of, and just this, look at a consolidation for what? From mid-December to mid-January, right? So literally a month of sideways action. Everybody that was a buyer in there is now underwater. So any kind of pops back up into those levels. That's why staples and utilities were on my focus list for shorts. And tech was the other one. So when we get down to tech, I'll talk about that. So here is your discretionary. This one is starting to shape up. It's kind of reminding me a little bit of the communication sector a few weeks ago. But it's not there yet. It's still kind of in no man's land. I still think any kind of pops up here into 147 going to be a big fade. But I do think that we're starting to hold levels. I would probably watch to see if Thursday's lows hold, if we retest Thursday's lows. If we break under Thursday's lows, I wouldn't really want to step in front of this. Maybe not till 131. And let me see here. Let me zoom out a little bit. I might consider this level here too, which is going to be a little higher, right? It's the 20-day, 132 to 133. But watch out under Thursday's lows. I wouldn't step in front of it too early, right? Because if we come under Thursday's lows, what we've had is this big move up, sell off, lower high, lower low, and then it could roll back over. So just be careful on that. All right, communications. This is what you want to see when something's shaping up, okay? Just these, again, failed breakdown right here, reclaim, and then now we're back into this. Try to come back lower, which if you look at the weekly chart, was that short continuation trigger right here, and it just made a higher low. You should be able to see it on the monthly. Let's see. No, so because it all happened in that one same month, you don't see the higher low on the monthly, but you do have that failed short continuation trigger on the weekly, meaning the monthly 20 is now in play, which is way up at 65. So on dips back to support, I am bullish on communications now, right? I don't know if I'm a chaser. I don't think I'm in any hurry to get in. I really want to see what happens on retest of the 20-day, which is currently right below 50. So any kind of retest of 50, that psychological round level, that's the spot for me on communications. And the only way I'd be short biased is really emotional speed ups, right? So currently probably around 56.30. Any kind of emotional rip up into those levels, I might still look to fade. Obviously next level above that, going to be up here. Actually still would consider 57.20s as well, but that 61 area. Okay, but again, remember, this is what we talk about all the time. We were bearish this sector for the longest time. Every Sunday prep I'd come on and talk, you'd swear that I had something personal against this sector. Just, oh, it's ugly. Every pop is a short. Every pop is a short. Yeah, well, black and white objective trend reading allows you to look at this chart and say, look, even though we were bearish for the longest time, things are shaping up and we are able to change our stance. And even if I'm wrong, I'll be able to change my stance again when the author of the story starts to tell me I need to. Okay. Bios, still really bullish on this. I like that breakout. I like the retest of that breakout level. If you remember, that's what we said last week, was now that we had the directional move, now the retest is the spot you buy. And what did we do? We bounced right off it. So I still think Thursday's lows are the spot to hold, if not the 20-day. So anything into this 83.50 to 84 area, you might not get it. This thing may just end up being something that starts really pushing. I like the look of this chart so far. Tech. Here's the tech chart, and this is the 135.50 to 136 area. That's really where I'm looking to fade the tech names. Again, this could change if we reclaim some levels and start to hold. At the moment, in fact, it's actually more so in no man's land, right? At the moment, for me, there's nothing. I need a big push into that level first. If we get that, then I'm ready to fade names here. I guess I would probably look at the quarterly pivot, 20-day / 125 psychological level as a spot to be a buyer, but I'd rather stay focused on looking for those big moves up into these levels, okay? And energy and oil, I think they still look good. I think they're still, we reclaimed those levels we talked about, and what happened? We retraced and held. Got above that level, couldn't close above it, but we retraced, and now we are back above it. So the only thing of concern on oil is just the fact that we're butting up right into the underside of the 50-day. But again, I would just wait for Monday to see what happens and see if we can get above Wednesday's high a day, and then I'd be looking for dips to hold if I had an idea to express via an individual name in the oil sector. It wouldn't be on the short side. It would be a long, and I'd be looking for levels to hold, especially that breakout level, that 140 area, okay? All right, so that's the sector analysis. Let's get into the individual ideas. First, we're going to start with the long setup. Strong stocks looking for continuation. Square is the name, baby. Square is the name. Making money is the game. 73.20 is what I want to be a buyer at. Pretty much, let's see. I think it was the 5-minute I was looking at when I drew this. Yeah, so on Tuesday we held there. We came under it. It acted as resistance, obviously on that big downtrend day. And then Thursday there was nothing because it was, we attempted to continue lower. But then on Friday when we had the big trend day, that was the spot that acted as that resistance the first time, pulled back, held trend on the 5-minute time frame, got above it, and held, right? And so that level for me is 73.20 area on an emotional flush. That's where I'd be looking to be a buyer. But actually before I get into that, there's still the ability for this to end up gapping up. And if that happens, I'll probably switch the game plan to looking for this quarterly pivot to hold. You can see it held late day on Friday, and it's been tested quite a few times. So if we gap up 77, 78, 79, something like that, any kind of flush back down into this 75.30 area, I'm probably looking to bounce square. But the one thing I wanted to make sure I reiterate is that we talked about this as a bigger picture idea last week, and it triggered. Like, it literally already triggered. So here is the setup. You won't see the higher low on the monthly. Again, we talk about this all the time, the fact that you have to understand what's actually happening on the time frame below instead of using the next time frame up as your cheat sheet, right? You have the short continuation trigger right here. When we broke below, it was the break below, let me see, what was it? 59.62, okay? So this week here, when we broke below that level, that should have taken us to new lows. It did not. So what does that entail? What does that tell us? That means we had a failed short continuation trigger. Failed short triggers create the most powerful long triggers, right? And so now we're above those levels. So now I want to be putting on a long trade. And again, guys, I want you guys to understand this. I don't care if I'm wrong, right? I just want this to be asymmetric. So what I'm looking for from my long-term account, I have multiple accounts that a lot of it's cash right now because of the market we've been in, but some of it's going to be deployed for this square trade. I'm in no rush. Remember that, guys. Remember, when we see these higher time frames start to show us that there's a setup, it doesn't have to happen in the next day, week, few weeks. It could take months, right? So I'm looking for pullbacks to the 20-day on the daily chart to put the trade on. That's pretty much where we're at here on this level. I marked out it's about 67, 68. You can see if the target's going to be the monthly 20. I'm trying to be conservative here, right? I don't want to put the target way up here because I know it's going to take weeks or months to get up there, if it's going to get up there, right? So I'm not going to try to embellish this or make it look better than it is. So I'm just hovering under the monthly 50, okay? We're still getting over 3-to-1 on the trade, okay? So when we have the ability to get 3-to-1, 4-to-1, 5-to-1, whatever it be, on these trades, on these bigger idea trades, I don't care if I'm wrong. I just have to know that the setup was valid, and that I know that it's that's another thing. You guys need to define setups for yourself. This for me is a 100% beautiful, valid setup. So I will put this trade on, and if I'm wrong, I will take my loss, and if I'm right, I'm going to take my win, and I'm not going to make a big deal out of a loss, and I'm not going to have a big celebration out of a win either, right? You need to it's just another trade. But I like this trade. I like this risk reward. I like this setup. And so I am going to be looking to put this square trade on. So pullbacks to the daily 20, which are currently, right down here at 67. Okay. And it's just one of those set it and forget it. It's either going to go to the target or it's going to go to the stop. Stops under the 52-week lows. Okay. Simple as that. But I really like the day trade on this as well. It's liquid. There's range, right? It's 3.5 ATR on a $70 stock, and it trades, over 10 million shares a day usually. So yeah, that's square. Boeing earnings Wednesday before the bell, so make sure you understand that. But I'm eyeing a flush into the 20-day / monthly pivot / round psychological 200 level. This thing's been strong, and if you look at what happens every time this thing comes into the 20, that's where it tends to go from. So why should I? If it ain't broke, don't fix it, right? So every touch on the 20 since October has just been straight up. So I'm just looking for a flush down in the 20-day. You got your monthly pivot there. You have that round psychological 200 level. I'm looking to bounce this. Remember, earnings before the bell on Wednesday. This to me is a day trade. I'm not entering this with the idea of swinging it. So for me personally, I don't need to worry about the fact that they have earnings. But I'm throwing that out there for anybody that watches this that doesn't do their homework and doesn't know who's reporting. I don't ever want somebody to be like, yo, Ricky talked about Boeing and I didn't realize they had earnings. So now you freaking know. All right. Last idea in strong stocks looking for continuation is Caterpillar. What was the idea here? Monthly pivot for a bounce play. And I believe, I remember I liked this monthly pivot just because it held on Friday and it was resistance on Thursday, right? So that was it was actually support for a little bit on Thursday. Kind of consolidated there, came under, and then rejected when it tested from the underside. Now we're back above it and it held on Friday. So it, depends on how close we open to it. I would prefer to have some sort of 250, 251, 250, 150 as your open, and then so that way if we flush into that level, that it actually has to extend to get there, right? But if it doesn't, we open 249 whatever and we kind of just drip down there. This is a level I still really like on a stock that's been very strong. So I still will possibly watch this for higher lows, watch for it to hold, and then it would be a trend join at that point, right? But I much prefer it to be an emotional flush into that level from higher up. So we'll have to see where it opens and what we get, but I like this chart. I love the fact that it had the big sell-off into the 20-day and got that bounce right off of it. The only thing I'm not the biggest fan of, right, is the sector because of that relative weakness that XLI had, right? But again, this company, this chart has been on a tear, so I'll make the exception here. All right, moving on to oversold reversion setups. The only one on the list this week is GIS, and actually Adriano, my mentor, he's, I believe, in this trade. I think he put a swing on it. That's the power of the community, right? A guy that I trust his ideas and I trust his experience. When he sees a stock like this, it puts it on my radar, right? So I probably wouldn't have even seen this chart had it not been for him. But when I pull this chart up, I love this big sell-off, and I love that we had that candle on Friday. Now, what I don't necessarily love is the fact that Friday was a big rally day and that this didn't have that big rally. But I am playing this basically. I want to flush into 77 with risk under Friday's low a day. I like that the 200 days right there. You guys can see this has been support plenty of times. So I'm just playing this as though the low a day or Friday's low a day is the low, and this is going to turn from there. The only other possibility I'd watch is, if I put it on 77, if you guys look, 77 was a level 2, right? It was basically what held. So here we come down. Here's your turn, okay? And if you guys don't know this setup, I don't know why you don't, because you should. Anyway, there was a short continuation trigger here, and it failed. And that is why this became the turn, okay? We retested it late day Friday, held. So I want to kind of buy against that level with risk under the lows. Dude, you're looking at like 40 cents, 50 cents, 60 cents of risk on a $70 stock for the possibility of having a big move up, right? 79 into the 80s, who knows? I just want to make sure it's on my radar. Obviously appreciate Adriano putting it on my scan, and now it's just a matter of me executing my plan on it, okay? That is it for the long setups, guys. Short setups, weak stocks looking for continuation. Let's knock out Duke Energy, baby. You guys have heard me talk about it enough. All right. I am looking for basically, I want the 200-day. I think that's what I wrote down, right? I mean, I had this trade on already, and I took it off. We had multiple points on it. It didn't matter because that wasn't the game plan. The game plan here is under 99. So we haven't broke 99 yet, but the sector that this moves with, utilities, already triggered its setup, right? So I'm looking for any kind of pop into the underside of the 200-day with risk over these recent highs, and I'm looking at probably 95 as the first target, and then below that's probably 91, okay? And this is a swing, okay? All right, next idea is MOS. I'm watching for an emotional spike tomorrow. Monthly pivot slash this downtrend line, right? And actually it's the weekly 20 as well. 49, you also have that 50 psychological level right above it, but I am just looking for a real quick spike into the 49.50 area for a fade on MOS. And the last idea in weak stocks looking for continuation is CL. Underside of the 200-day is where I kind of want to visit this for this idea. So this one is a staple, right? Remember, that's one of those sectors where I'm short bias is the consumer staples. I was kind of debating between this and Procter & Gamble PG as what I would throw on the Sunday prep. I went with this. I love the fact that the 200-day and the 50-day are both right there at that annual pivot, right? So if it doesn't work from that spot, I have no problem revisiting up at the 20-day. But I really like the 200-day for now, okay? And that's Colgate. All right, overbought reversion setups. Quite a few names are pushing in the levels. There were names from last week that never got into the levels. Those names are still valid, right? So Amazon's one that comes to mind. I'm not going to talk about it again this week, but if you watch last week's prep, that idea is still valid. But this week, first name on the list is Google, and I like this 104.80 area as the fade. For me to take this fade, guys, has to get there emotionally, okay? 104.80 is just, to me, it's just a level that when you draw it and look left, that level just makes a lot of sense, okay? But it's got to get there emotionally. Keep in mind, this sector is the communication sector, okay? So flushes back into levels could still be looked at as longs, but with this big gap up and a big push on Friday, I'm hoping we extend. You know what? I actually think this might be one of those ideas that just never gives me what I want. But in case it does, I got to have it on my list, right? So 104.80 is the spot for me on Google. Next idea is Baba. It depends on where it opens, and these Chinese names are really hard because we have no idea. Chinese Shanghai market opens long before ours does. So a lot of stuff happens in China before our markets even open up. Right, so we have no idea where this is going to open. That being said, I am looking for a parabolic pop on this in the 125. You can see that was kind of where this major reversal happened after we had the last really big run up, okay? So looking for any kind of push up into those levels, and I wanted to get there emotionally, and I will take a fade up there. I have no problem being wrong, stopping out, and if it stays strong and continues to be emotional, taking my shot at the next level. That's not a problem for me. Make sure it's not a problem for you guys, right? I cannot manage your risk. I can only manage mine. But I do like BABA into that 125 area. Coin. Now remember, we talked about Bitcoin, right? Bitcoin was, probably gonna butcher this. I think the level we talked about on Bitcoin was 25.2 or 25.3. I hope that this can get up into that 61 to 62 area and coincide with a similar move into a level like that on Bitcoin. If so, I really like this 61 to 62 area. Again, really gonna have to see where this opens, because since crypto trades 24/7 and crypto's had quite a move, this may end up gapping up quite a bit. If it gaps up into like the 59, 60s, even 60, then 61's too close. 62's probably still too close. But what I would do is I would just let it work, let it blow out to whatever levels it wants to. Watch for that failed, that inability to continue higher even after long triggers, and we get that reversal setup, because we had this on watch, I believe last Sunday for the 57 level, right? And that level proved really, really amazing, gave a great trade. So there's no reason to, even though that we talked about this last week, you got to be careful with the crypto sector, because these themes can stay really strong when a lot of money's pouring in and coming in. But if you're really meticulous about your levels, you can see that these are still really good plays. So I'm still looking to fade coin on further extensions, okay? And the last idea this week is WYNN. 97.50, under 97.50 triggers this, okay? You guys should see the setup. I hope you guys have been following me long enough now that you don't have to, I don't have to draw these all the time, but I'll do it. Okay, so a break below 97.50, or is it 97.50? Let me just check these prices here. Yep. Under 97.50 triggers us with a valid setup with the 20 day as the target. It doesn't mean I'm going to chase it. It doesn't mean if we crack 97.50, I'm just shorting right in the hole. I'm going to be watching if it cracks 97.50. Actually, you know what? Now that you peer into the intraday, you see there was actually this 97 level as well. Who knows? I'll probably wait for a 96.89 print, meaning 11 cents below the whole number, to show me that the author is actually trying to break that level, and then I'll look to short pops back into probably 98, depending on where we can pop up to and where some of those intraday trends are developing. But this is a trade I'm stalking for sure. Now, if this breaks back above 100.5 or whatever these highs were, check out the daily chart. It was 100.39. Okay, so above 100.5, this idea is void, and I go back to stalking. The only way I like this trade is if we break 97.50 before making new highs. But it looks promising. Why else do I like it? Because of where this is happening. Okay, it's very likely if we come under 97.50, this turns into one of those failed breakouts and just comes right back into the 20 day. So I really do like the look of this setup. It's just an if-then statement. It needs to do something first before I have a trade. All right, so that's it. I'm gonna look at the into the questions real quick and see if there's some questions to answer, and then I'm gonna let you guys enjoy your weekend. Let's see. Cruz says 25% gamma expired this last Friday. A lot of that was 390. Could loosen up a little more to the downside. Okay, yeah, and he's talking about SPY there, guys. So Cruz is the man when it comes to the option stuff. I listen to him like he knows his shit. I don't pretend to know my shit, right? So I'm not going to discuss gamma or open interest on things. A lot of times if I have questions about that, I'll reach out to him or options Mike and make sure that I know what I'm looking at. But I appreciate him throwing that in the comments so people can read that and know that. So thank you, Cruz. I think that's Simon. What's up, Simon? Ricky gets a chance. Tesla looks like it's breaking above trend line, but didn't see that on your list. Tesla reports this week, so that's why I wasn't wanting to really talk about Tesla. And you know, for me personally, again, I don't care that we're above the 20-day. I don't care about trend lines. This is still, even though we are above the 20-day, this is still the first push into the underside of it, and we have yet to have an attempt to go lower, right? We have not had that short continuation trigger on the daily chart. Other time frames have, right? And so like if you were looking at those time frames, then by all means you may have a trade on and you're just letting it work. What I would like to see is this break below Thursday's lows and attempt to come down lower and try to give us a higher low on a weekly chart, right? Would like to see a higher low on the weekly. So, you know, if we break last week's lows and it puts us right back into this 120 level or even this 110, those are the areas where if I was, and I guess first you have to like discern whether are we talking swing, are we talking about day trades, because we can day trade Tesla every single day, right? Tesla makes big emotional moves into levels, gives nice trades, holds trends. I mean, no matter what kind of trader you are, there's almost always a way to trade Tesla every single day. But if you're talking about a swing trade, that's what I'm kind of talking about right now. I would like to see a weekly bar break down because we do not have a higher low on the weekly chart yet. And in order for me to think we're going to go retest the weekly 20, that's what I'd like to see first. So hopefully that answers that question. Jordan says, Netflix second day play looking to take out earnings highs, flagging on Friday's move, 345 to 346 key area. We can check out Netflix. Look at the daily here real fast. Hold on. I mean, I could see it, you know, I could see trading this thing either way. I would possibly look at dips to 330, you know, a retest of this Friday's opening price / the breakout level that held. So that would be the spot where I'd first look to probably dip by it. I gotta look at the intraday to see what these levels look like. Maybe even a little below it because you have some of these 335 areas, but you know, any kind of flush down there emotionally for a bounce. But I could also see the short side on this as well. Any kind of parabolic move higher up into these 350 areas would really have my attention for the fade as well. Another one, like especially since Friday was Thursday after the market was earnings and Friday was the first day of trading since their numbers came out, you have elevated liquidity, right? Netflix is a really great trader for the day of earnings and the subsequent 2 or 3 days, right? Because the liquidity and the volatility is higher, and so it really does make a great trader. So yeah, 100% will be something I'm probably keeping an eye on throughout the week. Jordan also is saying something about Adobe. He says daily consolidation breakout of last 2 months range, room to fill gap in the 200-day. Let's check out Adobe. This one's a little thinner, you know, and again, like I don't mind trading Adobe if it has an emotional move in the first 30 minutes or whatever. The chart looks great. The first thing I will mention is that this is a really nice daily chart. Gives a really nice opportunity to scoop every time it comes back down into the 20-day here. So the first things I would look for would be like, one, now that Friday's price closed strong like that, you probably don't want it to come back down to the 20-day now, right? If you were looking to be long this, especially for what Jordan's talking about, he's talking about a gap fill 200-day up here into the 360s, all right? If we're going to go there, you don't want to see a ton of this move given back. You'd probably want to see at most a 50% retrace of Friday's daily candle, which also puts you up into some of these recent highs, right? So you'd want to see, you know, these 348s, 349s start to hold. And we can take a peek at the intraday as well. Yeah, and so you also have intraday on Friday. That was where that dip came back to, right? So that's what I would look for. Like a 349 to 350 flush scoop, and then have pretty tight risk on it. If it continues to make lower highs and lower lows and rolls over again, you just stop out. If it comes down into these levels and makes higher lows, you may get that second day continuation push into the underside of the 200-day. So I like the look of the daily chart on it. I do think you probably are spot on about the possibility here of this gap fill / 200-day. So good eye on that. Simon's asking about Apple. Long bounce 135. I think it has room to get up to 144 if it can get through the 50-day. Let's look at Apple. Yeah, you know, again, so that you definitely don't want to see it come back under 134. Any kind of flush back down into those levels, you definitely want to see hold if this is going to continue to push. You know, to me, it still has a lot of work in front of it, a lot of work to do to get back to levels where I think you would have a bullish look. Especially because to me right now, what I'm seeing is what looks just like that Tesla chart, right? This is still that first push into the underside of the 20-day, even though we got through the 20-day. We have not had, the author on the daily time frame has not attempted to roll back over yet. I want to see that first, because then on the weekly chart, again, just like Tesla, we would like to see a higher low on the weekly. So I'd like to see us, you know, again, assuming swing idea, right? Because I know Simon pretty well, and a lot of times Simon is thinking like longer term, trying to position into these strong companies so he can get on board. But again, with these kinds of long-term ideas, we don't need to be first one in. And this thing has not made a higher low on the weekly yet, right? So I'd like to see us roll over, maybe retest 131 and put in a higher low on the weekly chart and then start to watch it. I don't think for long-term swing positions, guys, I don't think you should be staring at daily charts. I really don't. Just my 2 cents, but you know, I think you just get too much noise, too much stuff happening, too many levels that you're like, oh, does this level matter? Because I really think, look, the last short trigger here hasn't been retested yet, okay? So a push back up into these levels where you can see we were holding, lower high, and then we broke and we flushed out, okay? We haven't retested that yet. So a 141, 148.5 push, even though that's above the 50-day, to me, that doesn't mean bullish. That actually, I'd be watching to see what happens into that level. And again, I would like to see us roll over, come down into this 130, 131 area, and put a higher low in on the weekly chart. I hope that makes sense, Simon. All right, Javier, thoughts on W long at 44.72 if gap up, or 41.85? Maybe leave a piece for a swing too. I don't know about swinging W. Yeah, I guess the chart does look good, you know, especially after that crazy move on Friday. Yeah, I'd watch for 45 to hold, because that was the breakout level. And again, yeah, you know, Javier's always got levels that line up perfectly with the stuff I look at. He's, you know, he's a true trader member that we talk about these trades all day long, and he's seeing things pretty clear. But I don't know, like, let's see. Honestly, like, we've got the long trigger. Let's look at a weekly. So look, here on, come down, push up into the weekly 20, lower high. I don't know if we actually broke these levels. Let's draw a line and see. Yeah, it never really did. We didn't get the short continuation trigger on the weekly. It came really close, right? Like super close. But regardless, that, you know, now that we're breaking above those levels, I do think that this looks good. You definitely want to make sure it doesn't turn into what we were talking about earlier. Remember, we're still in a bear market, and you got to be careful that these don't turn into failed breakouts. Oh, dude, come on now. 1 second. Just trying to make these lines show up on the daily chart too, so we don't have to guessing where they were. There we go. Okay. Yeah, so 44, 45, you want to see hold. If we come back under 44 and start to butt our heads, I'd be worried, right? So that would be that second scenario you talked about, like that 41.84. I don't think you want to see that. I think you want us to stay above these levels. Obviously, it could come down in the 20-day, start to curl again, maybe we make another push, but I think for the time being, you kind of want to see that 44 levels hold, all right? All right. Cristobal, LMT on earnings. Does it look right to break up? When are the earnings? I'm sure it'll tell me on my chart here in 1 second. the 24th. So is that Wednesday? I think that's Wednesday. It's an interesting spot. The thing is like earnings is going to either make or break it, right? If earnings sends this thing pushing, I think you can play as like a mid to longer term low has been put in, right? So we come up into the 455, 460s. I'd probably be looking for 445s to hold, stay above the 200 day, and you could structure a thesis that way. But again, one, you gotta wait till the earnings come out because that's really gonna probably be the deciding factor here. And two, the only way I would trade something like LMT is if there's a catalyst and it has like heightened liquidity, because right now, this thing, a lot of days it's just trading 1 million shares a day, right? And to me, that's not enough for me to get in there and want to trade that. But again, like I said, if you're thinking swing, wait till the numbers come out. If we roll over, this thing could come back down to 400. But if it wants to push on good numbers and the market agrees, then I think you could make a thesis. And the thesis doesn't mean that you're guaranteed to be right. It just means your risk is defined, right? You would say, all right, push up into the 460s. I'm looking to buy a flush back in 445 with risk under 438, right? Right or wrong, let it play out, and set your ego aside. That's the only thing I really see on LMT. Z Infinite, what do you think of FFIE for a breakout long? It's just one of these ones. I don't trade these names except for on the short side when they have really big parabolic multi-day moves. And this would have to get this thing would have to be in the $2 to $3 range before it would have my attention. Now, if I'm just going straight up off the chart, I think over 65 probably could send it. You have like this little 3-day flag with 2 inside bars, and I could see, volume coming in. But again, I don't trade these sub-dollar stocks, guys. So try not to have too much of an opinion on them, especially considering, most of these companies are priced where they're priced for a very good reason, okay? Cristobal's asking about BNGO and Snap. BNGO is one of those ones where I'm very familiar with the share structure and the way that they play these games on this name. It's a piece of shit. It could go higher. If it does, like if this thing has another one of these kind of moves, I'll be all over it on the short side. Other than that, like there's nothing about the chart right now that says anything one way or another for me. We're right up into resistance. It's holding below, we're below the 200 day, we're below the 50 day. This thing could easily just put in another lower high here and roll over. So just nothing there for me. Snap. Oops. Didn't mean to hit F12. I'd like Snap to start going, especially considering it's in that communication sector as well. And it may, right? It may get some tailwind from that sector. Let me look at the weekly real quick. We're right into the underside of the weekly 20 though. We do have the short continuation trigger from the weekly on this one. This is one thing I'll point out here. So we've had that push up, the pullback, the lower high, and then we broke, right? So this right here was the short continuation trigger, okay? Because it did not make new lows, now if we come back above this $12 level, this really should have your attention. So I would set an alert for above 12. Above 12, and I definitely want to be knowing that was a major reversal on a higher time frame, right? That to me means that we've had the failed weekly short continuation trigger and the monthly's now in play. And if you look at the monthly chart, it has a lot of room to go, right? Like in the monthly chart actually shows it pretty well as well. This is one where it happened over a long enough period of time that you actually can see it on the monthly chart, the higher low right here. And that over 12 is the level, okay? Well, that was the wrong one to draw on. There we go. But again, and it sucks that I can't make these circles smaller, or maybe I can, let's see. Because they're so big, they're overlapping and you can't really see. But honestly, look, let me get rid of these circles and just look. You can see, here's your low, here's your higher low if we get over 12. And then that should make an attempt to get back to the monthly 20, which we have not tested for quite a while. Okay, so again, this is a setup that is looming. I'm going to set alerts for it, and just like Square, right? If this, then that. Okay, so good eye. Thank you for pointing that one out. KH is asking about shorting CRM. Dude, the reason we don't talk about CRM is because there wasn't any trades there in terms of like there's no reason for it to be on my watch. If it rips up into this 160 area, maybe, but like until there's a setup there, for me there's nothing to do. Okay. And Alex says, what do I think about USO pushing into 70 or pushing to 74? I'm not sure if you're asking if like I would fade that spot or if I think that that's a possibility that it does push there. Remember, oil's been strong. It is really you're picking up pennies in front of a steamroller if you're shorting the strongest sectors, even in a bear market. But if you're careful and pick your spots, right? If USO goes parabolic into 74, to me that's a really good spot to probably put a fade on for individual names that are going to be moving correlated to the sector. But again, like I'm not sure if he's asking me if I think it can get to 74. I mean, first things first, would need to clear 72. If it does, yeah, I think it could. I would hope if it got above 72 that it made that parabolic rip. But again, that's just another one of those ones where right now, currently in no man's land. If this, then that, then maybe we talk about it next week. But and again, like for me, I have scanners that pick up those kinds of moves, like we all do over at TrueTrader. That's another big thing I guess we should talk about sometimes, is the fact that the people that are over at TrueTrader, we don't have to be watching this to push into 74, because if it rips there, it's going to hit the scanners and show up on the spike scanners and the pivot scanner, and we'll all know about it without having to be watching it every single day. So like that's a really big factor on why I'm able to stay so, kind of like calm and patient, is because I just wait for them to hit the scanners, and if set my alerts. If things trigger, then go into levels. Like to me, that's the way to trade. I don't need to be constantly like a dog chasing his tail, right? That's not how you want to be trading, guys. That was a lot of questions this week. I'm actually happy. I like when you guys ask those questions and stuff. Hopefully I was able to answer some of them to like in a manner that gives you guys a little bit of clarity. But I appreciate it, right? Like I really do like it when you guys ask questions and interact. Again, it's Lunar New Year, so we're heading off to a potluck party, and I'm wishing you guys all the best for the rest of your weekend. Enjoy the football games if you're watching the football games. Check us out at TrueTrader if you haven't. If not, I'll see you in the markets tomorrow. I hope it's not your money I'm taking, guys. Peace.